What's up guys, Ben here and welcome to Motivation to Invest. I recently did a video on gold investing, which the great billionaire Ray Dalio recommends every investor should have at least some gold in their portfolio.
Buffett won't touch gold.
Okay, yeah.
You think he's wrong? Well, clearly you must.
I think he's making a big mistake, yeah. Gold is like cash. It's an alternative version of cash. So over long term, it's not the best investment. Over long term, it's a little bit better than cash over long term. It is, however, when you're having a monetary crisis, when you have a fiat monetary system, and you have the need for money. Debt is a promise to deliver money.
Right.
So if you look at each of those devaluations that have taken place, March 1933, President Roosevelt closes the banks and then opens them and says you can get your money. And then they broke the link with gold. And so the history over that period of time is that money can be produced. Gold is somewhat limited. It's an effective, it's an alternative that should be part of everybody's portfolio, but not in a big way.
In the comments of this video, a fiery debate ensued. Should you buy physical gold or a gold ETF? Well, in this video, we're going to find out as I weigh up both methods of storing your wealth, which in these troubled times seem more important than ever. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, go ahead and give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more stock investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and be sure to turn that notification bell on. With that being said, let's get into the video. So what's so special about gold? Gold has been the world's most reliable currency since civilization began. It was first recorded to be used as a currency in 600 BC, before being adopted by the Egyptians, Romans, and then of course, modern civilizations. Gold was used as a currency due to its unique properties. This glowing metal can be melted down and forged into gold coins, shapes, and jewelry. It's also anti-corrosive, so will literally last thousands of years without rusting or corroding like other metals. In Tutankhamun's tomb alone, they found his coffin was made from 1.5 tons of gold. Now, one of the main properties of gold is its rarity, with the total amount of gold ever mined adding up to just over 171,000 tons. To put things into perspective, all the gold in the world could fit inside a cube with sides of just 20 meters or 67 foot. This would reach 9.8 meters above ground level if on the Wimbledon centre court. So how much gold should you have in your portfolio? Well, I recommend for most investors around 5% of your portfolio should be gold. This is in line with Ray Dalio and even the millionaire Shark Tank investor Kevin O'Leary.
I've owned gold for decades and I simply have a 5% weighting. I look at it quarterly. When it becomes more than 5%, I sell into the strength. And when it weakens, I buy into the weakness. It's just a stabilizer. You know, I'm not one of those guys that's going to go to 40% weighting in gold. Okay. I don't believe the hyperinflation story. It hasn't happened. Gold is popular for a whole host of reasons. And 5% seems to be enough. It's worked for me in portfolio management. It's the only security I own that doesn't pay a dividend.
So, Kevin, I guess, do you not care if gold goes to $2,000 or $5,000 an ounce? You're still going to buy gold?
Yeah, I don't care. Like, let it run. I'll be selling into that strength, keeping a 5% weighting.
So how to invest into gold? Well, there are two main ways of investing into gold. The first is physical gold. That is gold bars, gold coins, and even jewelry. Physical gold is especially good during a crisis. For example, if the entire monetary system collapsed, as Ray Dalio is saying could be a possibility, then physical gold is a great hedge for your investments. And if our paper currency became worthless and we reverted back to a hard money-based currency, then the value of this gold would skyrocket. To a greater extent, physical gold is extremely useful during times of war or when you are unsure about the stability of the country or the financial system. For example, if a government became extremely corrupt or was taken over by a rebel party, they may attempt to own all the cash in the banks. Thus, if you have the physical gold, you can pack this into a bag or ship it to a foreign country for safety. The UK government even shipped the Bank of England's gold from its vaults to Canada during the war. Of course, this is an extremely unlikely set of scenarios if you're in a modern country with a government you can trust. Another rare scenario which would make physical gold a great hedge would be if the financial markets governing exchange traded funds or exchange traded commodities actually collapsed. So what is a fund? Well, a fund is just a collection of stocks or securities which tracks a particular index, such as the S&P 500 or a commodity such as gold. Let's take an example. The iShares S&P 500 ETF. iShares is part of the BlackRock group. This investment firm has purchased the stocks in the S&P 500 in order to track this index. But imagine one day there was a major financial crash, like say a hack or a government takeover. Now the exchanges weren't allowing you to sell your ETF. This will mean your wealth would effectively be trapped. Now you may be thinking physical gold sounds great, and if the apocalypse is coming, I want to have some physical gold on hand. However, there are many risks with physical gold. During normal non-crisis circumstances, the acquisition and storage of physical gold can be time-consuming, laborious, and even dangerous. For example, if I wish to purchase some gold coin, I would have to order it from a broker first, then verify that the physical gold was real, unless you just trusted them at face value. However, I would not recommend this if you're purchasing large sums of gold coin. So let's say you bought a lot of physical gold. Where would you store it safely? Would you stick a few gold coins under your mattress? Or would you need a specialist vault? Would you need a safe? Or would you need an external company to secure the gold in a massive vault? There are various places to store your physical gold. But one thing's for certain, there's a lot of people who try to rob it. We've all seen those movies where robbers break into a house and hold someone at gunpoint, asking them for the code to their safe. So it's not exactly safe to have a lot of gold in your house. You've also got to think about fires and other unforeseen circumstances. Another disadvantage of physical gold is its liquidity. Let's say you had some physical gold and you want to sell it. Well, first you need to find a broker. However, during a time of crisis, would that broker be open? And even if they were open, would they practically be able to purchase the amount of gold you want? Would you have to smelt down the gold you have into smaller units so they can purchase? These are all negatives which you need to be aware of with physical gold. Also, if you find a buyer, you have to be aware of scams and robbery.
It was quite the haul for a group of armed robbers who got away with more than their weight in gold after a heist in Brazil. Surveillance video shows men with masks disguised as police officers drive into part of an airport in Sao Paulo. Their pickup truck looked like a Brazilian federal police vehicle. They forced workers to load more than 1,600 pounds of gold into the truck before making their getaway. Authorities say 2 airport workers were taken hostage during the heist. Good news, no one was hurt. $40 million in gold. This is a movie.
This brings me neatly onto method 2 of investing into gold, and that is by investing into a physical gold ETF. Let's say one by iShares. Now, iShares is owned by BlackRock. So let's say this firm purchases a massive amount of physical gold which is stored in a vault in Switzerland. The iShares physical gold ETF tracks the gold price of this physical gold in the vault and then creates a market to allow shares in this fund to be easily bought or sold to anyone in the world. This makes the shares highly liquid, which means it can be easily bought or sold. Gold is directly owned by iShares or BlackRock and never changes hands, but the shareholder owns the fund which represents the gold. Thus we own the gold but through an intermediary party, which is usually backed by the government or some type of financial system, which is an insurance or a risk, whichever way you wish to look at it. However, steer well clear of synthetic gold ETFs. These gold ETFs don't actually own any physical gold. These track the gold price by investing into futures or options, which gives you the option to buy gold at a future price point. These futures ETFs are very risky, so I would not advise investing into them unless you have an extremely thorough understanding of exactly how the market works. So which method of investing into gold is right for you? Well, that is down to your own personal circumstances. But personally, I'd say unless you've got more faith that you could keep the gold safer in your house than it could be on the foreign exchanges, then you could go for physical gold. However, on a practical note, this is only really necessary if you have a massive amount of wealth to store. Let's say I was some James Bond villain and I had a massive secure compound, then me having physical gold would make a lot of sense. But generally, keeping a lot of physical gold in your house can be extremely risky. For most people, I recommend a physical gold ETF, such as the one by iShares. Even the great millionaire Shark Tank investor has physical gold as well as a physical gold ETF, which allows him to trim his position to 5%. My favourite is the iShares Physical Gold ETC, or Exchange Traded Commodity. You can buy as many shares of this gold ETC as you wish for on a free trading app such as Trading 212. If you'd like a free share worth up to £200 or $200, then use my special link to sign up below and you'll get that when you deposit. So what are your thoughts on gold investing and which method do you prefer? Comment your thoughts below and I'll join in the discussion. And if you enjoyed this video, go ahead and give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.